All right, let's talk crypto. If you've ever been scrolling through prices, you've probably seen a coin that's just a few cents and thought, wow, that's a steal. But what if I told you that a coin's price tag can be one of the most misleading things in this space? Today, we're going to break down why that is and what you really should be looking at.
So to kick things off, I've got a quick question for you. Just by looking at the price, which of these two imaginary coins do you think is bigger? Okay, so you've got coin A sitting at 50 bucks and coin B at a cool 1,000. Now your first instinct is probably to say coin B, right? I mean, it's 20 times the price. But that's a really common trap. To get the real story, we've got to look way beyond that price tag. And the tool that lets us do that is called Market Capitalization, or as pretty much everyone calls it, market cap. This is the metric that shows you the true scale of a crypto project. And trust me, it's way more important than the price of just one coin. So what exactly is it? Well, to put it simply, market cap is the total value of every single coin that's out there in circulation, all added up. Think of it like this. It's the price you'd have to pay to buy the entire project, not just one little piece of it. And here's the bottom line. Price just gives you a tiny snapshot, what one single unit is worth. But market cap, that gives you the big picture, the value of the entire network. And that difference, that's everything. You know what the best part is? You don't need to be a math genius to figure this out. The formula to find a project's real size is actually super simple. First up, you need the piece of the puzzle we already know, the current price of a single coin. This is the number you're seeing on all the exchanges, changing every second. The second piece, which is just as important, is the circulating supply. This is simply the total number of coins that are actually out there in the wild, available for you and me and everyone else to buy, sell, and trade. And putting it all together couldn't be easier. You just multiply the current price by the circulating supply, and that's it. Price times the number of available coins gives you the project's total value. It's market cap. Now, you might also hear people talk about total supply. That includes coins that technically exist, but are locked away, maybe for the dev team or for a future release. But for figuring out the current market cap, we only care about the circulating supply. Why? Because those are the coins that are actually active in the market right now. Okay, so now that we know how to calculate market cap, how do people actually use it? Well, investors use it to sort cryptocurrencies into different categories, kind of like how stocks are organized by size and risk. First up, you've got the large caps. These are the absolute giants of the industry. We're talking Bitcoin, Ethereum, with market caps over $10 billion. Think of them as the blue chip stocks of the crypto world. They're usually more established, more stable, but because they're already so huge, it takes a ton of money to really move their price. Next are the mid caps, which land somewhere between $1 and $10 billion. These are kind of like the fast-growing companies of crypto. They've proven themselves, but they still have a lot of room to grow. A lot of people look at these as having the potential to become the next big thing. And finally, we have the small caps. Anything under $1 billion fits in here. These are the startups of the crypto universe. They're incredibly volatile and carry the most risk for sure. But this is also where you find that potential for just astronomical growth, because a small market cap has so much more room to multiply. So knowing these categories is a great start, but how do we actually apply this stuff? Let's talk about how market cap can be a really practical tool for making smarter choices. See, market cap doesn't tell the whole story on its own. A really important metric to look at right alongside it is trading volume. If market cap tells you how big a project is, trading volume tells you how active it is. A high volume is usually a good sign. It shows there's a lot of interest, and it means you can actually buy or sell easily. Understanding these tiers is also a game changer for diversification. For instance, a pretty common strategy is to balance your risk. You might put the majority of your portfolio in stable large caps, a good chunk in growing mid caps, and then maybe just a small slice for those high-risk, high-reward small caps. Now, it's really important to remember this. While market cap is an awesome tool, it's not the only thing you should be looking at. It definitely has its blind spots. You got to remember this like a mantra. Market cap is a tool, not a guarantee. If you rely on it and nothing else, you're going to make mistakes because it just doesn't give you the full picture. For instance, a small cap coin's price can be manipulated pretty easily. Or a project might have a huge market cap on paper,
But if its trading volume is super low, you might have a really hard time selling your position. That's why you always have to look beyond the numbers. You have to research the tech, the team behind it, the community that supports it, the whole shebang.
So, let's wrap this all up with a simple checklist you can use. Number 1, always look past the price tag and find the true size using market cap. Number 2, check the project's pulse, its activity level, with trading volume. And number 3, always look beyond the numbers to the fundamentals of the project itself. If you can do that, you'll be evaluating crypto projects with a much sharper and much more realistic perspective.